Happy Monday, everybody. I hope everybody is doing well. Today is February 7th, 2022. It is the first Monday in February, and this is your Monday market update video. Let's jump right in. Let's talk a little bit about what happened last week, and we're going to talk about what's going to happen this week. A little bit of a preview, what is normally a quiet post-jobs week. So let's see. Monday was a quiet open. Then the markets took the news from Friday's rally, as well as good Chinese economic data, and even some less hawkish comments from Atlanta Fed President Bostic, and continued Friday's upside momentum. There was not a lot of news going on, so the Fed speakers, they got the headlines. So most of them spoke in line with Bostic, Daly, and George. A bit more dovish, speaking about a gradual approach to raising interest rates, which the market took as an indication that this 50 basis point increase is probably less possible. The market got into buying, got some additional buying into the close, and closed near the high for the day. S&P 500 closed up 1.89% on the day. More dovish comments from Fed speakers overshadowed the hot inflation print on Tuesday. It was another good day for the bulls. The relief rally, the S&P 500 was up another 0.69%. There were some fireworks on the day, at least in headline grabbers. Philly Fed's Harker said that he supported the 25 basis point move in interest rates, as well as downplayed the excitement of the balance sheet runoff. Again, that's sort of just going in line with the idea that 50 basis points may not happen. Finally, Senator Manchin declared that the Build Back Better deal was dead, which the market has already priced in, so that's not such a big change. St. Louis Fed President Bullard spoke, made more comments that indicated that 50 basis point is probably not going to happen. So we'll have to see how that goes. Stocks moved up into the close and ended near the best level of the day. Big tech earnings were on the agenda on Wednesday. We saw Google and AMD beat the expectations and lead techs higher. The ADP employment report was disappointing and negative, but not such a surprise after we've heard a lot of this from the Fed speakers all week already. The market gapped open higher, then turned lower in the morning, then stabilized and made its way back higher. The S&P 500 closed just under 1% higher on the day. Thursday, we saw volatility back in action. Stocks came for sale. Facebook, or Meta, as it's now known, earnings were horrible. At least if you looked at the market, you'd say that. I'm going to let the analyst report talk about all that, but the stock dropped by 26% on the day. Just to give you a data point on that, Meta, Facebook, lost $252 billion in market capitalization that day. That is more than the entire value of 475 companies listed on the S&P 500. The market cap decline was more than the entire market cap of each of the following: Pepsi, Nike, Wells Fargo, Netflix, UPS, Intel, Qualcomm, McDonald's, Morgan Stanley, and AT&T. There was more than that causing the market's volatility. Let's talk about that. Meta earnings, in addition to the Meta earnings, we saw valuation. Look at what we saw the last couple of days. Markets continuing to rise, so that valuation was a little bit of a headwind. Also, we saw the ECB and the Bank of England took a more hawkish stance. All of that, and the S&P 500 was down by almost 2.5%. The Dow was down nearly 1.5%, and the NASDAQ, of course, was the worst, down 3.75%. Friday was, of course, jobs day, and what a report it was. Expectations were for 150,000 jobs, but the report came in at 467,000, along with revisions up from last month's numbers. So the economists were off to the races to explain this. S&P 500 and NASDAQ were positive on the day. Dow was just barely down on the day. Payroll numbers were a boost of optimism for the economy. Earnings are also holding up. As of today, 56% of S&P 500 companies have reported, 79% have beaten earnings estimates, and 77% beat revenue expectations. How are the earnings affecting some of these stocks? Well, we saw Amazon last week up 13.5% on their earnings report, Snap up 58.8%, and Meta, as we talked about, down 26%. So more this week: Disney, Coke, and Amgen for the main Dow companies will report, along with some other tech stocks. 76 total S&P 500 companies will report this week. Let's talk about as we move into this coming week. Unlike the second week of January last month, this is a relatively normal post-jobs report week, all things considered. We do have CPI on Thursday, and that will be a big one. So it's pretty much any inflation report these days is going to be major focus. Today, Monday, no major reports. Tuesday, we'll get business optimism number. And though it can normally be downplayed, remember what we talked about last week. If businesses are optimistic, they're going to spend more. If along with consumer spending and government spending, all that spending is going to keep this economy humming along. So that's important stuff to look at. Wednesday, we'll start the parade of Fed speakers. We'll get Bowman and Mester on Wednesday, Barkin on Thursday to coincide with CPI numbers. Thursday will be jobless claims as usual, and Friday will be the University of Michigan consumer sentiment. Not a huge number, but everything seems to be in focus these days. A few other things to keep on the radar. 10-year Treasury hit 1.93% last week. As we move towards that 2%, watch the high growth names. This is going to stay in focus. Also, the 10-2 spread, as we talked about last week, now at 60 basis points and closing. The U.S. dollar pulled back from 97 to 95 last week. Huge move as we saw other global central banks get more hawkish. This does matter for the global aspects of the earnings for our multinational companies. If we climb back too quickly, it will be a headwind. Speaking of climbing, oil is over 90 again and has a $100 barrel in its sights. Even if there's so many things causing this, remember, oil is part of the inflation picture. So all that is a lot to digest again. So keep an eye out for the Friday planning video. As always, call and email with any questions. Have a great week.